All right, welcome everyone. This is Bob Maurer. It is Tuesday, the very first day of October, around about 2:30 my time. I want to do a deeper dive into two strategies I introduced recently. That is numbers 324 and 325. 324 is the bear spread in coffee. 325 is a bull spread in soy meal. They were benchmarked yesterday. We'll see how all the numbers lined up in terms of entries and exits and the risk. And I'll give you a bit of the backstory as to why I published these. So let's hop on into it. Dial into the portal. You'll see the PDF version here for this week. And we've got 324 right here, beer spread coffee. And as you can see, we're waiting to get in at the close of day 0, which was yesterday's close. And then we got the entries and exits in the P&L. And then 325 here, bottom row, bull spread soy meal, the DSMarch, and again, waiting for yesterday's close, and then doing the math for the entries and the exits. All right, so let's get over to the charts. Take them one by one. Here's coffee. Okay, so in yellow here, strategy number 324. Whoops, that's not it. Yes, it is. 324, I just have the wrong commodity here. Let's get this one fixed. Coffee bear spread. Okay, sorry about that. Here we go. So long May, short March coffee. Margin requirement just about $500. Risk reward here in yellow. More conservative entry level 2, risking 470 per spread to either make 337 or 468. And then for the more aggressive average in traders, if you were to get in at both levels, you'd be risking 657 per 2 lot that you averaged into to either make 393 at level 1, target 1 that is, or 656 at target 2. If all we do is get level 1 and then it breaks down to the first target, the game would be 56. And backstory on this one, it's been a profitable strategy 12 out of the last 15 years. I did look at the losing years. Those were 2018, 22, and 24. And in my opinion, we didn't have much correlation in terms of the price, the incoming price into the seasonal window, nor the structure of the chart. So back in those years, in my opinion, the structure was more flat, more sideways in terms of the chart. And then for the pricing, this year we're looking at a much higher entry level price than those other years. So I don't see a whole lot of correlation, which means to me I don't feel like history might repeat itself in terms of those 3 years. The benchmark to stop range for us, so benchmarked it yesterday at 270. That's where the market settled. And that's our starting point. Our stop is up there at 395. That difference in price is 125 points, and 125 points in coffee, with each point being $3.75, comes to right about $468. And with us giving it that amount of room, that would have been plenty enough to stay on board 15 out of the last 15 years. So we're giving it ample room, and we're looking to get short. And based on yesterday, settled at 270. First entry level was right there, so getting in at the close. Second entry level is up here at 345, and then stop is 395. First target was 255, so it was close. Second target, 220. And as you can see, we pretty much had a big break today. So it already went through target 1, looking to stretch down to target 2. All right. So this has moved pretty quickly in our direction. It didn't really start moving higher, take out these swing highs, which was the hope, and then get us on board and then break. It pretty much broke right off the open here. So we'll see how this plays out. If you were prepared for this and you were looking to get out of 255 and you got in yesterday, you'd be sitting with a little bit of money, 56 bucks per spread. And hopefully it stretches down to this 220 level. So that's about a 35-point difference times, again, 375 comes to another 131 bucks that you might be able to squeeze out of a spread if you held on to some of your position. All right, so we'll see how this one plays out. Basically, it kind of already did what we thought it would do. We'll see if it gets down to the 220 and take it from there. But that is strategy number 324, beer spreading coffee. Looking to get short. You got the entries and exits, got the risk reward, and the rationale behind it. Okay, and then the second one I want to go over is the bull spread in soy meal. And it's going to have kind of the same story as coffee because you can see what happened today. So anyway, this is a bull spread soy meal. Let me bring in the risk reward here. It's all the way over here. Sorry about this. There we go. Okay, so bull spread soy meal in yellow here. Long December, short March. Margin requirement just shy of 800 bucks. Risk reward, entry level 2 traders. Risking 180 per spread to either make 510 or 740. Entry level or more aggressive average in traders looking to get into both levels, risking 940 per 2 lot that you average into to either make 440 or 900. All you do is get that first level, it would be 260. The reason I published this, the backstory, it's been a winner 13 out of the last 15 years. And the losing years were 2019 and 2018, so 2 years in a row. And sizing up the charts in those years and the structure in those years compared to the one you're looking at right in front of you there for the years we'd be trading, I didn't see a whole lot of correlation in terms of price or structure, in my opinion. There was one other year that kind of stood out, and that was 2023, where it ended up being a winner, but at some point it was an outsized loser to the tune of about 760 bucks. And again, sizing up the chart in front of you there, the contracts will be trading relative to what the structure and the price was in 23. I didn't see a whole lot of correlation in terms of price or structure. So again, comparing worst case scenarios of losing years and years where there was outsized unrealized losses prior to taking a winner, I don't see a whole lot of correlation. So net didn't seem to concern me too much. And the probability is still leaning in our favor. And we were able to define the risk and reward, so I published this. Our benchmark to stop range is 600 bucks. So our benchmark yesterday was negative 13, stopped down here at negative 73. That's a 60-point differential. Each point in soy meal is 10 bucks. It's $600. So that's where we get the 600 bucks. And that would have been enough to stay on board 14 out of the last 15 years. Okay, so now that's that. What happened? So if you were ready and prepared, well, actually, no. This one we were looking for price improvement, both levels. So we were looking to get in at negative 30, so 17 points less than yesterday's benchmark. Yesterday's benchmark was negative 13. We were looking to get in at negative 30 and then negative 55, stop at negative 73. And instead, the market just exploded to the upside today. So over the last couple of days, this white line was providing some kind of ceiling. This is the 200 period moving average for the action in this particular spread. And then today it just blew through the top of it and went right through all 3 targets. So highly unlikely this one is going to fail. I'll give it a day or two to see if it's going to push and down and completely erase this big move to the upside today. But so it may very well end up that we don't end up doing this one because we had the big explosion to the upside. So when I set my targets, I wasn't expecting it to happen all in one day. And hindsight's 2020. When I wish I would have been a little more aggressive and recommended getting in on yesterday's close, but it is what it is. So that is strategy number 325, bull spreads, decent March soy meal. And we've got the risk reward. I gave you the backstory. We got the entries and exits. Going to give it a couple days, see if this thing reverses for some reason. And then I'll walk it forward real quick to see if it's still viable. But net, that's where we're sitting at the moment. very well maybe that I end up canceling this in the next few days, but at least I got this in front of you so you kind of understood the rationale with a recommendation. All right, so that's that. I'm going to leave it there. And thanks so much for watching.